Hi guys, Harry Yotis here, professional trader for 20 years now. Started way back in 2005 and still alive in 2026. So, today, Friday, the last day of a very volatile week. Thursday, big down candle, huge indecision. Can you even see it? It's like a little cross right here. Highs, lows, right at indecision at about the 681 level on SPY. Okay. Basically, the big news of the day is we're still churning. We're still caught within this band, and it's basically on a wait and see mode. However, the teeter totter is tipping in one direction, so we'll get to that shortly. First of all, let's talk about the technical picture. Technical picture yesterday, we have to bring in the moving averages. Here we go. We closed below the 50 yesterday, and we closed below the 50 today. So we're technically not in bullish mode anymore, but we are in neutral mode. Okay. The 50-day moving average and the 100 and the 200-day moving average here in blue are still upward sloping. However, the short-term moving average is starting to curl down. Not a big deal so far. Okay. Let's get rid of this so you can see better. This is basically a chopping formation, up, down for months. The beginning of 2026 has been very, very choppy. If it wasn't for Thursday and Friday, it would be an uptrend waiting to break out, okay? But because of Thursdays, we have to change into neutral, choppy mode. And with that comes the fact that we will turn more bullish when we break the highs. Anything within this range is just noise, even going back to like 673 to the highs of nearly, I would say, touching the 700 on the SPY. Okay, so Friday the 13th basically tells us nothing. Okay, we don't know. We have to wait till next week. So I'm going to keep it into neutral territory, neutral bias, which is we don't know. We're in churning mode, up, down, up, down, up, down. It's burning a lot of option premium. Okay, and this is what you want to see. And next week we have options expiry, so we're probably going to continue some kind of churn. Okay. I would like for this market to go lower, okay, to go lower, touch 673. Okay, we'll get to that shortly. Of course, we compile our technical data, or I should say, we compare our technical data with the sentiment, fear and greed index, smack and fear. Perfect. Look, momentum is at extreme fear. We still have strength is still at greed. I don't know why. And the breadth is still pretty good. A lot of sectors are doing well, so it's probably like tech driven, okay? Probably Mag 7 driven weakness, and SaaS. Okay, a few sectors are doing bad, and it's pulling the market down. And we have extreme fear in the put call ratios. I'm sure puts were bought across the board. Okay, market volatility is at fear, safe haven demand extreme. So, what does all this mean? Okay, we're still at fear. We're waiting. Okay, this is why I want this market to go lower, a little bit lower. Let's touch this, maybe undercut this 673 level, which is the previous highs here. Okay, so we're in this chop zone. I like it to go here because if you look at the VIX, okay, today the VIX was higher. It was at 22, but it closed at 2065. Maybe we have to test the highs at 23 again. Maybe go a little bit higher to 25-ish, okay? Before we start buying again, okay? And that, I think that if it gets to that level, we'll probably get into the extreme fear, okay? Just touching it. Okay? I don't want to linger in extreme fear. That means the market's continuously going down, okay? But we are, the reason I'm leaning bullish longer term, even though we're in neutral territory right now, the reason why I'm looking to buy is because we are so fearful already, okay? Any move down, like we mentioned before, any move down in the SPY, okay, is going to get the VIX super high, and it's going to get people into extreme fear and buying even more puts. Like it's going to stretch an already stretched bearish outlook and positioning. Okay, people are bearish here, not bullish. That's what we mentioned. That's why I don't think it falls too much before a huge move to the upside. We might need to we have to get more bears in before we go higher. Okay, I don't know. Okay, that's why we're in still churning mode. And I'm waiting. It would be nice to have a move down so I could pick up some more stock. Then I would be willing to pick up more stock when we get into the extreme fear category, when we hit some levels. So you put the odds in your favor going long, okay? I do not think this market continues to tank outside some kind of like extreme move forward, Okay, like I don't know, some Trump comes out, maybe I don't know, the Epstein files, indict some billionaires and they start selling stock. I don't know. Who knows what happens? Trump declares war on Iran. We have no idea. Okay, but the fundamentals are pretty good. Okay, the economy is still rising high. GDP is good. We saw jobs beat, and today even we had a macro print. We had the United States inflation rate, CPI, come in at 0.2%, and they were expecting 0.3%. And the core inflation rate was at 0.3, and they were expecting 0.3. So slightly lower. The inflation's, it's ticking lower. Okay, we have inflation ticking lower, and you can see that if you look at the U.S. 10-year. Okay, the government bond, it's been stuck above 4, but look, it's been going down, trending at 4. Anything under 4, we're heading in the right direction. The long bonds are saying that rates should be coming down, and that should be good for the Fed watch and rates going forward, okay? So we don't even need the Fed. This is non-Fed controlled. So the market is telling you rates are going to go lower, which is going to be supportive of the market. That's what you want to see, okay? It doesn't, if we were, excuse me, let's go back. If the market was really, really afraid of inflation, this would be going high, okay? They're not afraid of inflation. The economy is not strong enough for inflation. It's not rip-roaringly hot. It's just chugging along, 0 to 100,000 jobs created, people not filing for unemployment, and 3% to 3% GDP with inflation at 2-3%, which is like basically flat, real return. It's like just barely chugging along. We shouldn't see huge inflation prints in this environment. I mean, if you can get even more technical by going to the break-even rate. You can see the 5-year break-even. If inflation would be up to here, it's basically down in the past couple of days, okay? Because, the market doesn't see inflation going higher in 5 years, okay? Like they expected a 2.45% going forward, which is basically the same for the next 5 years. Like they don't expect any inflation surge or rip, okay, in the next 5 years. So going back to the SPY here, we have the fundamental data that is still okay. We have market at fear. I don't know why everybody's super scared at highs. I would expect to see them much, much more, greedy. We didn't. We barely saw any greed in this up move. Okay, we have stocks like what? Bitcoin. Remember Bitcoin? Breaking down below this key 73K level. Why is that key? Because that's the high from the 2024 era. Okay, I was expecting a breakdown, come back, and then come back into this territory. Well, it's sort of hovering there. We're not there yet. Bitcoin is not out of the woods yet. We can say that Bitcoin is also, quote unquote, still churning like the market, waiting. Okay, today is very good. Look, as the market went down, Bitcoin's catching a bid. I mean, it's so oversold. It's so overdone on the downside. So much pessimism in Bitcoin that I expect that bounce still. And I expect the market will go up as well with it. Okay, so we have Bitcoin here it's in churn mode. It's not saying anything bad. I mean, look, it fell a lot. It fell from 125,000 down to 70. Okay, that was 40% drop. But the market's still at highs. A drop in Bitcoin, a drop in every other sector, like the SaaS sector, we saw a lot of the SaaS stocks getting murdered down 30-40%. But the market's not affected by those particular sectors, especially Bitcoin. Bitcoin's not big enough to be affected, to affect the market. Okay, maybe temporarily through like margin selling, but not more than a 2-3% drop in SPY by this Bitcoin selling. So we know that this market is resilient. We have underlying things that clues that it's resilient, but it's positioned like it's going to tank. The positioning is we're fearful, we're going to tank, it's all over. Sell everything, even gold today was sold yesterday for some reason. I don't know, because the logistics firms were down, but they're back up now. Okay, and then gold is back up too. Okay, silver though, that's the one that's still down. Still, I would expect silver to catch a bid as well, like gold did. It did not. It's still lower. So silver is more volatile, so it should stay low, but it could catch up very quickly. Gold is more of a sure thing. Okay, quote unquote. It is more solid. It is bought by sovereigns. There is a fundamental tailwind going on. So this is like a sure bet. That's why I'm more into gold than silver. But you should have silver because the fundamentals are still good for silver. Okay, and we're waiting to get into gold and silver, as we mentioned. We're not there yet. We're waiting to see some kind of here. this point right here. We mentioned it before. We're going to mention it again. Some consolidation with very low volatility in the candles. Here, candles are crazy. Okay, we're waiting. Okay, the premiums of options are going to be super expensive, and they still are. So we don't want to get into anything right now. Gold might hover at the 5,000 level forever. As long as it stays here, you're going to see all the miners start going up again. Okay, so let's reiterate. What do we have for SPY? Still churning. We have everything in the still churning mode. We're in neutral. Okay. We're waiting now for us to get bullish. We need to break the highs. But I think this does it, especially if we go even lower here, like the 673, maybe undercut it. We can get the sentiment down to extreme fear because people are already very, very fearful. Okay. Buying a lot of puts at these levels. Everybody's scared. This is not usually. You could always, there's a chance you're wrong, right? But that's not how market forms a top. Market forms a top in euphoria, okay? We have to see some extreme greed, everybody long, and we have to see good news coming out and the market falling. Here we have constant bad news coming out. Okay, let's go back to that because it's an important point to touch. If we have good news and the market starts falling when everybody's super happy, super long, and super bullish, then we should start being worried. But here we have constant bad news and the market's just churning at highs. Okay, we're waiting for that to be solved. We also saw other sectors in the market like Bitcoin catch a bid today and still churning. I'm still waiting for it to capture the 73K level. Okay, so you have other sectors trying to come back. Okay, yet SPY, even after this drop, SPY is still very, very resilient. And of course, we saw the mother of precious metals, gold, holding the line, not really being affected. Look at this chart. It's beautiful. Apart from this 1 day smash from God knows what, 2 days, back up almost. Recovering more than half its losses. Silver, a little bit more of the stepchild that everybody wants to beat up on. It's still at lows. We're waiting. Okay, we're waiting. Like we said, this is very volatile, so there's a huge spread between these two levels that we have to wait within. But wait within them we must. Okay, so that's it, guys. Still churning, waiting to see what happens. We're praying for it to go lower so we can get more extreme situations and sentiment while the fundamentals are still good. I wouldn't be buying extreme fear and whatever if everything else wasn't good. Okay, the fundamentals are still good. That's why they're not rolling over. That's why I'm looking to buy. Okay, I'm not just buying the dip blindly. Okay, so but we want to get all of the odds in our favor. So here the odds are in our favor, and we have an explosive move higher. Okay, we're waiting. It doesn't have to go to extreme territory. It can still power higher, but I would like for it to, just for the sake of getting a better risk-reward ratio. So that's what I'm looking forward to. Next week is options expiry, so I expect the churn and the chop to continue, okay, which is great. Even go lower. I would love for the fear to start kicking in even more, okay? So until then, guys, I'll see you and enjoy your weekend. Later. And Friday the 13th, crazy.